Hello everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. Just daily technicals today for Bitcoin. It's been moving sideways for the last 7 days and it's still finding resistance about 44,700 and support at 41,000. After this pullback, there's a hammer candlestick pattern at the low and now we've got upward movement, and this looks like a reasonably decent looking V bottom. I expect that the low here is going to be sustained, and overall I'm expecting upward movement, and I'm expecting it to start to show an increase in volume and momentum. Maybe not this week, maybe not next week, but within this month. By the end of February into March, we should start to see a real increase in volume and momentum. Along the way up, we may see pullbacks or consolidations about identified resistance. We're seeing a consolidation just below 44,700. The next area is about 48,000. Get some free giveaways today to help you with your technical analysis. Click on the link below to go to my website and you can download one or more of these 3 giveaways. I have an ebook on technical analysis basics for you. These are the contents of the ebook, several chapters on some basics, some indicators, some techniques, looking at gaps, looking at scale for your charts, and I've even got 2 steps to a high probability trade setup there for you. Another free giveaway is this easy candlestick pattern guide to the major candlestick reversal patterns, bullish and bearish, diagrams, descriptions of how they should be read and in what context. And a third giveaway, I have this Elliott Wave structure guide, 3 pages giving you all of the Elliott Wave structures with all of the rules you need to know and diagrams of the ideal form for each. Motive structures on 1 page and all of the corrective structures on 2 pages. So click on the link below and get any one or all of these 3 giveaways for free. Overall, as price is moving sideways, volume is declining, very low volume in the last 3 sessions. I expect once we start to see some more upward movement and price breaking above resistance, we'll probably see an increase in volume. On balance, volume has a nice little range. I'll be watching this one quite closely this week. The upper resistance line has, we could count 1, maybe this could be a second and a third test. The lower support line, only 2 tests. They've both got a reasonable slope, so not great technical significance, rather weak, but a break out of this little range would give us a signal either way, so I will be watching that carefully. ADX has really interestingly finally got below 15. It's still declining and now it's too low to indicate a trend, and the DX lines recently have been whipsawing. ADX is setting itself up absolutely perfectly for a really nice indication of a new trend. RSI is neutral. It didn't reach oversold at the low. Money flow is neutral, was quite a long way from oversold at the low, but they're both below the 50 mark. So ADX, RSI and money flow have now set themselves up perfectly to indicate a new trend in either direction, but I expect it's most likely to be upward. At the weekly time frame and at the monthly time frame, the trend is still indicated as upward. So keep your eye on the bigger picture. There is still a long-term strong upward trend for Bitcoin. ATR is declining as price falls. It was rising strongly as price moved higher. Volatility remains to the upside. This supports a bullish analysis overall. Stochastics reached oversold while price found support. Stochastics has reached overbought while price is just a bit below resistance. It's now consolidating. A model of stochastics plus support and resistance would expect price to see a downward swing to support and stochastics to continue lowered until it reaches oversold, and there the downward swing may end. The bigger picture for Ethereum remains very bullish. This is my Elliott Wave count with all of the data available for Ethereum from its inception back in 2015 to the current day. From this low to this high, there's a beautiful looking 5-wave impulse. This impulse up lasting 29 months, and the following bear market, the first year-long bear market, will just shy 11 months. From this low to this high, there's another very, very good looking 5-wave impulse, and now we have a 6-month bear market down to this low. The impulse just short of 3 years, 2.8 years, and the correction following it 6 months. This downward movement is back in this price territory, so you can't label this 1, 2, 3, 4 because 4 may not overlap wave 1 price territory, so you have to move the degree of labeling down here. So now you have 1, 2, 1, 2, leading to a very bullish wave count. My ballpark figures, not targets, for where these big third waves may end. The first one uses an extreme Fibonacci ratio of 11.09. The second ratio, 15.28, is the length of intermediate 3 to intermediate 1 within primary 1, and the last ratio, 19.13, is the length of primary 3 to primary 1 within cycle 1. So I'm using the lengths of previous large degree third waves to inform what's possible for this large degree third wave, because the only data we have to use for Ethereum is its past behavior, so that's what I'm doing. So they're ballpark figures, ideas of where it might end, and the first number is probably too low. At the daily chart level, I'm seeing a third wave at minuet, minute, minor and intermediate primary and cycle degrees. I'm going to use this lower edge of this best fit channel as an indication where current corrections may find support along the way up, and that's been working for the last week or so. If minute wave 2 is incomplete, then the alternate wave count sees it continuing lower as an expanded flat, A, B, C. This has a low probability because B is over twice the length of A, and now within C, the fourth wave of this impulse is much more time consuming than the second wave, reducing probability. It's common for cryptocurrencies to have disproportionate second and fourth waves, but only when the fourth wave is more brief than the second wave. When you see it the other way around, your wave count has a lower probability, but low probability never means no probability, and it's important to be open-minded and flexible and consider low probability outcomes, and when they do occur, it will never be what you expected as most likely. That's the annoying nature of probability. Something a little bit difficult, I think, for some people to wrap their heads around, but what I'm doing here is an exercise in probability, not certainty. The target for this one is for a deeper pullback to reach 1965, and minute 2 may not move beyond the start of 1 below 1521.78. Technicals at the daily time frame for Ethereum, it found support here with a hammer candlestick and some other bullish lower wicks here around this low. Support just a little bit above 2,100, found resistance at 2,400. That was expected. Now we're seeing a little sideways consolidation. I'll expect we might see this week or maybe early next week a break above resistance at 2,400. If that happens, look for next resistance about 3,580. Volume is declining as price moves sideways. That's normal behavior for a consolidation. ADX is declining, indicating no clear trend. RSI is neutral. Money flow is neutral. ATR, a measurement of volatility, is declining as price moves sideways. It was previously rising as price moved higher. Volatility remains to the upside for Ethereum, again supporting a bullish outlook. Because there's no clear trend, the model of stochastics plus support and resistance would expect overall an upward swing to continue until stochastics reaches overbought and price reaches resistance. The big picture for XRP also remains bullish, but its primary wave 1 did not manage to make new all-time highs. The wave count, however, still remains bullish with a first wave up here, a second wave down here. So the first wave lasted 3 years, subdivides nicely as an impulse. The second wave, a double zigzag, lasted 2 years. So there's really good proportion here. And then another motive wave structure over up here. This is a leading diagonal for primary 1, a deep zigzag for primary 2, and now another first and second wave most likely complete. Targets for XRP, again, rely on previous ratios. Here, primary 3 was 14.71 times the length of primary 1. If we see that ratio exhibited again, then a target would be 27.14 for primary 3. If we see that target for cycle 3 to cycle 1, a target would be 40.53. Those are not Fibonacci ratios, they're just what it's previously exhibited in this huge impulse for cycle wave 1. So what if intermediate wave 2 is incomplete to continue lower to be a more normal depth in relation to intermediate 1. A normal depth for a big second wave for a cryptocurrency is from 80 to 90%, here giving us a range of 0.40954 to 0.34447. The problem here now is with minor wave C. It started with 1, 2, 3, 4 overlapping first and second waves. It needs to see quite a strong increase in momentum to the downside as the middle of a third wave at multiple degrees passes, and then small bounces or consolidations for 1, 2, 3, 4. Fourth wave corrections along down to the target. Minus C would be extremely likely to move at least slightly below the end of A at 0.4456 to avoid a truncation. Truncations are very rare. I have 3 short-term wave counts for XRP. The second one expects only a slight new low below 0.4456, not that much more downward movement. For minus C to move below the end of A. Intermediate 2 still seen as a zigzag A, but instead of B being over here, now I'm considering it could have been a triangle complete here, and C an ending contracting diagonal. This has a good fit, but the ending diagonal I mean, we could see minute 4 move a little bit higher to have a better proportion. This wave count now is going to require, if minute 4 is over here and doesn't move higher, it's going to require quite a strong overshoot of the 1-3 trend line. That can happen, but it's not very common. It would have a better look if minute 4 continued higher, but then minute 5 really would be quite limited and might not be able to move below the end of A to avoid a truncation, because minute wave 5 may not be longer than minute 3, which was just 0.1353 in length. And the third idea, which I think might have a better probability, is seeing intermediate 2 complete here as a single zigzag, and then minor 1 and minor 2 complete already, so a third wave at minor, intermediate, primary and cycle degrees in its very early stages for XRP. The impulse here for minor wave 1, some people are probably going to have a problem with this proportion. I don't. I see minute wave 2 lasting 53 days and minute wave 4 lasting 6 days. I've gone over this problem of proportion between second and fourth waves in quite some depth, and if you look at, I have a video playlist of educational videos, and there's a video on there looking at the proportion between second and fourth waves, and I go over previous movement which is very obviously complete and really won't fit in the Elliott wave count as anything other than an impulse, and I show you multiple examples where the fourth wave was more brief and shallow than the second wave, and I explain exactly why that happens in a market with this level of volatility. So I don't have a problem with this. This upward movement looks like a pretty typical impulse for a cryptocurrency. This downward movement completes nicely as a double zigzag, W, X, Y. This could be a deep second wave correction. Technicals for XRP, it's got 1, 2, 3, 4, 5, 6 hammer candlestick patterns, finding support about 0.4875. When you see a cluster of bullish candlestick patterns around lows, then you have to give it more weight. Let's see the context that that's occurring in. Overall, as price is moving slightly lower and mostly sideways, volume is declining. There isn't strong push to the downside. For the short term, volume is pushing price lower here and again here, but overall it's still declining. For the short term, volume is not pushing price higher. That's one of the problems with cryptocurrencies off their lows. Initially, they can appear to be very weak. It makes identifying their sustained lows very, very difficult. If you want to see what I mean, go and have a look yourself using volume and price, and have a look at prior sustained lows that have been sustained for some years, and have a look at how weak volume and even range as well can be initially off those lows. Sometimes it's not some weeks or even months after those sustained lows that you start to see a really strong increase in volume and range. On balance, volume is back within a range. It had a bearish signal that was negated, now finding resistance again. This resistance line now has 4 tests, a very shallow slope, and it's getting to be a little bit longer held, so it now has some reasonable technical significance. I'll be watching this on balance volume range, particularly the yellow resistance line, very carefully this week for XRP. ADX is declining. There is no longer a downward trend indicated, and it did reach extreme, although not very extreme. RSI almost reached oversold, so very close. Money flow got quite close to oversold but didn't actually get there. So the trend was extreme and conditions were close to oversold. That's fairly extreme for the end of a bearish movement for XRP. And so this adds some weight to those bullish candlestick patterns. In this context, I'm giving them quite a lot of weight. My bullish Elliott wave count would be the one I prefer now for XRP. ATR essentially flattening off. It's been declining as prices moved lower, along with volume and volatility declining. There is not strength in this downward movement. Volatility is to the upside as well for XRP, supporting a bullish outlook. That's it from me today with your analysis. I hope everyone had a lovely weekend.